Alright, now what's up guys, welcome back to my YouTube channel. And it's your boy V-Dollar back in today's video. It's lit. I hope you guys are really having a great time. So in today's video we are going to be talking about small accounts. Okay, so we are going to be looking at the things that you should actually consider, or that you should actually do as long as you are trading on a small account. Okay, now today's video is sponsored by TripleFX. For you guys looking for a broker with tighter spreads, quick deposits and withdrawals, all trading instruments, consider creating an account. The link is in the description below. Alright, now you guys really need to understand that when you are trading on a small account, the results on a small account are absolutely different from results from a bigger account. So whole thing is you understanding that okay, I'm trading on a small account. Now you admitting the reality is the best thing always, because it's like you making a loss and actually not looking at why you made the loss, but sort of trying to console yourself. Okay, this was okay, so whole thing is admit first. So you trading on a small account is the first thing. Now the results are going to be different, and the way you actually approach your trading is different. So just be sure that you understand that okay, I'm trading on $100. Of course, I'm not going to be trading like someone trading on $1,000 or $10,000 or $100,000. Like whole thing is the trading of course varies with the investment, the capital, because you could only have to use lot sizes of 0.01, 0.02, but the other person of course will use 0.5, 1, whatever, 2, and the results are going to be different. Now a quick tip on how you can actually be able to get these things straight into your mind is taking away the social media pressure. Now at some point you just need to filter out all this noise. Like, don't look at my results because my trading account is bigger than yours, right? Don't look at some other person's trading results, because this is sort of going to create some pressure, and you're going to change your pace. You're going to start doing a few mistakes here and there. Like, you want to make a lot of money on your small account. Okay, now let me share a quick story. So one of these days I was actually interacting with a trader. Now he's actually trading on a small account. So he said he deposited $55, right? Now he was able to make $40. Now that's ridiculous, because think about it, making $40 from 55, that's sort of flipping up the account already, right? Now he said after making the $40, he didn't even withdraw, not actually, but he's like, so I had to go back in and trade more. Now think about that, you have made $40 already on $50. Now what's the point? You've made money, you've made profit already from the little investment that you actually had on your trading account, right? So you can see that the whole point is he probably maybe didn't accept the fact that he was trading on a small account and he had actually made money. Not actually small money, this is big money as compared to the account. So the other thing that we really need to consider is why we get entries. Okay, now on $100 we need to get super sniper entries. Why? To avoid drawdowns. Now take an example. So at some point you could open up a trade and then go into a drawdown. I mean a big drawdown. The moment you are in a drawdown, of course your account is counting negatives. Now of course emotions, we shall discuss that later on. The whole thing is when you are in drawdowns you become unstable. So what we want to do is on your small account find sniper entries. Now let me share an idea on how you can actually be able to get these entries straight up in. Now we should always look at our entries on pullbacks or key levels. Now what do I mean by key levels? To people trading support and resistance, such an easy concept. Look for trades on support and resistance levels, right? Or if you're trading with a trend, look for entries at pullbacks. I mean, when you open up a trade at a pullback, you are going to be secure. I mean, this is a key level. We came for a pullback and now we are pushing to the upside. Let's say it's a buy. Open up your trade at a pullback and keep it up, because at the end of the day, when you are on a pullback, it's either a reversal. I mean, when the market breaks the pullback, it means we are reversing, and that would be a change in the trend. Now you could be able to close up your position, but most often enough, as long as you are trading with a trend, these pullbacks are some of the best entry areas. And then stop losses, you can look at 20 to 25 pips. Now let's take a case study on trading on $100. So we are going to say you are trading on $100. Of course, your target could be, let's say, making $10 or $5 a day. And now we are using a stop loss of 20 to 25 pips for pairs like GBP/USD, EUR/USD, JPY. A quick one here: don't trade gold, don't trade US30, don't trade oil on small accounts. Of course, they do make money, they do make big money, but it's sort of so risky, like on small accounts. But again, you could still be able to make a lot of money on those pairs and their indices. Okay, so back to what we were saying. So let's assume you're trading pairs like EUR/USD, GBP/USD, GBP/JPY, and maybe some other normal pairs. Okay, and then you are using a stop loss of about 20 to 25 pips with a lot size of 0.01. Now that means you are going to have a stop loss of about $2, right? And then obviously your take profit should be bigger than your stop loss, right? So let's say we would have to look at a take profit of about $6 or $5, right? So you can see we are risking $2 to make $5, and that absolutely makes sense, right? And the day, someone who makes now let me share something. Of course, someday you could make a lot of money, like you could make more money as compared to your target. Your target is $10 or $5, but someday you could make 20, you could make even 30, because it's money, like who cares? But whole point is keep your risk minimal. I mean, if the stop loss is 25 pips, keep that, meaning we are risking $2.5, and that's all, because at the end of the day we need to make money and stay inconsistent. Like, it doesn't make sense making money and then blowing it up the next trading day. Alright, now the other thing that we need to talk about is the type of trading. Now you could decide to hold your trades for a long time. Now sometime back I actually opened up positions, I think in May. Like, I've been holding these positions for months. Now you can decide to hold your positions for months. I mean, you could decide to do swing trading or day trading. I actually never consider scalping for small accounts. Why? Because scalping, you're going to hold these positions for just a few minutes and then you could only catch up to, let's say, 6 pips or 10 pips and you're out, right? Now assuming you're using 0.1 lot size, that's I think 10 cents, pretty not sure, but I think it's about $0.1. So you can see it doesn't make sense. Scalping and small accounts, no way. So my whole point is you could decide to do swing trading or day trading. Now swing trading could be okay, but again, you really need to be so realistic about why you open up trades. You know, most people actually mistaken this because they know, okay, I'm going to hold these trades for about days, weeks and months. So someone is going to just come to a chart, okay, the overall trend is to the upside, boom, open up a buy. Yet we were actually on a pullback and boom, you're stopped out, seeing the market pushing to direction, right? So look at either you doing swing trading or day trading. Again, it depends on your objectives. Like, do you need the money at the end of the day? Do you need the money at the end of the week? Basically, but swing trading could be better because you could open up a position, catch up to 500 pips. Imagine using 0.01, 500 pips, that's $50 on one single position. Either way, on the side of day trading, you could be able to hold these positions for just a few hours, let's say an hour, 2 hours, or some. Say you could be able to get some good moves, about 40 pips, because these pairs, GBP/USD, JPY, really have some great moves during the day, up to even 100 pips. Okay, so you could decide to choose from the two, swing trading or day trading, but scalping shouldn't be an option because it's really so demotivating. Alright, now the other thing that we need to talk about is no flipping. Okay, now our whole thing is making money on a small account. We are not looking at impressing, right? Because at some point I think trying to flip an account is impression. Now our whole thing is we need to make money, not double up the account or flip, because I've seen people flipping up accounts and then blowing it all. Why? Because you've made a lot of money, and the more you make the money, the more you feel like you need to increase the lot sizes, and boom, you're out. So our goal is making money. When you make money, close off the position and withdraw off the money. Now you could decide to come the next day, like no idea of account flipping, doubling up the account. Or if it's your objective, like, okay, I'm trading off with this amount and my whole thing is to double or flip up the account, that's okay. But if your intention is to make money, then that shouldn't be an idea to look at. Now, one last important thing is your emotions. Taking an example at the first story that I actually shared with you. Now, he got back into trading, like he went back in that day because he probably had some greed, right? Because he had made money, but he wants to make more. Now, that's greed. Now, we have greed, we have fear, we have revenge trading and over trading. Now, all these things pile up to make up the psychology part of trading, and this is really so important. So how do you actually overcome this? Just get down and understand your objectives. Understand that you are trading on a small account. Understand that you are going to get these results realistically. Like, we aren't looking at you thinking about making $100 from $100 in a single day. Doesn't make sense at any point. Look at your results realistically and then have an evaluation, like self-evaluation. No over trading, no revenge trading, just say no. Okay, so be a disciplined trader, get the other things down, be sure about the risk management part of it. No account flipping. We are trying to make money, we are not trying to impress. And those are just the most important things that you really need to understand on small accounts. Okay, if you guys find this video helpful, please consider smashing the like button. You can also smash the subscribe button to join this growing community. So I'll see you out.